Hi, welcome to Trading with TK. We're at www.tradingwithtk.com, and this is our weekend wrap-up series. This is a question and answer period where I'm going to try and answer a couple of questions that some of my readers have sent into. So let's get started. This comes in from Lee. Lee writes, during the Bear Stearns fiasco, there were rumors flying about Lehman Brothers. I'm going to paraphrase most of this. My question is that with your years on the floor, you must have heard your share of rumors and information about various stocks. Did you ever act on them? Are these all fake outs, or are some of them valid? Well, some of them actually are valid, but the ratio is so small that it's a loser's game if you play every one of these rumors that you hear. The problem with rumors are this. Usually by the time you hear it, you're probably one of the last of the group to hear it. You always have to remember that. You have to ask yourself, how far down the chain am I for this rumor? You take a look at the chart and you find out the stock's been going down for over a year and you're just starting to hear the rumor. I mean, it's too late. Or you may make a little bit of money. The only time a rumor is valid is when you start it, when you're that close to the real inside information. And then if you're that close to the real inside information, you're running the risk of it being insider trading, and you could wind up in jail. So, if you're too close to the rumor, it's not going to work out for you in the long run. And if you're too far away from the rumor, it's not going to work out for you either. So the odds just are not there. It is not a consistent way of making money. It's more of a consistent way of losing money. So that's my take on rumors. And yes, I've heard them, but I try to ignore them. I really try to listen to the message of the market. How many sellers am I looking at, or how many buyers am I looking at? Is the stock been going up, or has the stock been going down? And that's where I get my message from, not from individual people whispering in my ear. Because the charts tell me what everyone is saying, not just what one person is saying. So I hope that answers your question on rumors, which now leads me into some of my other favorite topics, is tips. Tips are related to rumors, but usually a tip comes from a friend, and usually the reason you get the tip is because he's already bought this stock and it's not going up. As a matter of fact, it's probably going down a little bit on him. So on a psychological level, he's going to run around and tell as many people as he can about this great stock that he's in, because he needs help. He's trying to push the stock up. Okay? So you got to be careful with tips from that point of view. Or the other way you'll hear about a tip is that your friend will come to you and say, gee, you know, I bought XYZ last month and it's already up 40% on my money. You got to get in. It's great. Well, it's up 40%. It's already too late to get in. He's not going to give you this. He's not going to give you the tip when it's right. He's either going to give you the tip when it's not going well, or when it's already gone well and it's too late. So be careful with tips. Not only that, tips are, most of the time you need to have these ideas embedded in yourself. You have to be the believer. Someone can point them out to you, such as somebody like myself, but if you can't embrace the look and you can't get the same picture, then you should stay away from the trade. These trades need to be your own, and the reason for that is because if there's a little bump in the road and it's not your own idea, you're not going to be able to withstand the bump. You'll get thrown out of the car and you'll give up on the trade. Whereas if you can embrace the trade, you'll be able to withstand a little bump in the road and have that fortitude to hang on for an extra 3 or 4 days. So that's why tips it's like the easy man's way of trying to make money in the market. And trust me, there are no easy ways. No easy ways to make money in this game. Okay, that also leads to my other favorite topic, which is news. These are all sort of related in a way. News, 9 times out of 10, when you hear it, it happens at the bottom of the move or the top of the move. News, the bad news never comes out, let's say, in Bear Stearns at 160. The bad news didn't come out at 160. It came out when the stock opened at 2. It's too late to act on. By the time you hear something, by the time it's in print or by the time it's on the television screen, it's much too late to act. 90% of the damage is already done. So you got to be careful about news, and that leads me to a little story here. I got an email the other day from somebody, one of my readers. Now, you know, we bought SPF the other day, and it actually pulled back one more time, a little bit more than I thought. I thought that was a little unusual that it pulled back that deep into the support pattern, but it didn't bother me because I knew the pattern was pretty good. And anyway, I got an email from a reader. He says to me, boy, I was so nervous at that position because when the housing start number came out, which I didn't even know was coming, it was really bad. And all of a sudden I realized, now I know why the stock has been pushing lower and lower and lower for 3 days in a row, because obviously somehow or another that news leaked out and people were acting on it. As soon as the news was over, the stock opened down like 10 cents and bingo, closed up 30 cents on the day. So that's my point. By the time you hear the news, it's too late. It's too late. Okay, so that's my take on rumors, tips, and news. Now I have another question from Roger. Roger wants to know, knowing stocks move individually, they have their own patterns and their own destiny, which they do. He wants to know why I look at indexes and why are they so important. Good question. Okay, the reason why we look at indexes is because there's an old saying on the street, a rising tide lifts all ships, and it's true. So if we're in a bull market and the market's moving higher, or let's not call it a bull market, let's not put names on these moves. These are uptrends and downtrends. Some last longer than others. And we're in right now. We're in an uptrend. Okay, so if the major indexes are all moving in the same direction to the upside, okay, we're in a rising market. Now you may be right being in a stock on the short side, and it may prove out to be right, but on a psychological level, it is so difficult to hang on to these stocks, especially when you wake up one morning and you see that the Dow indexes are up 150 points at the opening. You may turn out to be right, but from a psychological point of view, it's difficult. It's like swimming against the current. So I prefer to, if the market is rising, I prefer to look for only stocks that look like they want to go up, if they're in their early stages of a move. And vice versa. If I think the market's going down, I'll look for stocks that look like I can make money on the short side. Now I see stocks right now that look like they want to roll over, but I won't bring them to you because I don't want to be swimming against the tide. I want to go with the current, not against it. And that's why looking at indexes are important. But you're right, stocks do have their own patterns, and if I had to make a decision, this individual stock trumps the indexes. In other words, if I have a bad position in an upgoing market, the upgoing market isn't going to bail me out of the bad position. So the individual stock really has more to say than the indexes, but the majority of stocks go up with the indexes. On occasion you'll catch one that doesn't, but we're talking about the majority here. Anyway, I hope that you find this weekend webinar informative, and I enjoy doing it, and I think some of the readers send in some really good questions. So start bringing some more questions in for next week, because we're going to do this again next weekend. So until then, this is TK signing off.